Welcome back to the Markets Analysis, and I am joined by Samuel Gisho, who is the Head of Business Development at NCB Investment Bank, and Faith Mwangi, who is also a research analyst, to help us understand how has the markets been behaving in the first quarter. We're talking January to March, and I just want to get their first quick reactions when they look to the markets on how they see the quarter behaving and why we're seeing these sort of trends that are happening. Gisho, let me start with you. What's your quick comment when you look at the markets through the 3 months?
Well, of course, the Ukraine conflict is actually causing mass exit. So we've seen quite a bit of foreign investor exit.
Yeah.
It's been sustained. It's coming from the background of an expectation that we would see foreigners return to the market as we went into 2022.
Okay.
But from October, we still had, the COVID-19 had already caused a lot of foreign exits. So that has sort of cushioned the market from much, higher decline compared to what happened when the COVID pandemic hit.
Okay.
Because a lot of the foreign funds had already exited anyway and were being expected to come back. The local investor cannot sustain the market, based on the fact that over 70% of our market is foreign controlled.
Yeah.
That is the trading side of it.
Okay.
So that has caused, a bit of downward
Trends.
downward
Trend.
trend on the market.
Yeah.
But that said, it's not as much as we expected. But being an election year, again, we are seeing very low volumes.
Okay.
Traditionally, in election years, the market rallies up to the point of the elections, usually by up to even 20%.
Yeah.
This year, we've seen a decline, a bit of a decline.
Yeah.
And even those rallies are usually on very low volumes because, of course, there's a bit of investor apathy.
Okay.
So that means we are in unprecedented times. It's something we haven't seen. The volumes are much lower than we've seen in election years.
Okay.
So it's a very, very slow market at the moment.
All right, fair enough, Samuel, right there. And I would also want to get your quick reactions as well, Faith, from your observations, how the quarter has been, anything that Samuel has left out?
I would like to say it's also not a Kenya problem. I think we've seen this in all emerging markets where foreign investors are actually rebalancing their portfolios. So what we're seeing is investment being still retained in the blue chip and high market cap companies as the smaller companies suffer as foreign investors are now rebalancing their markets. So we've seen the same thing in Nigeria, we've seen the same thing in Egypt. So it's not unique to Kenya at the moment. Okay.
Let me stay with you, Faith. And when I look at the losers over the 3 months, I see the likes of Kenya Power, TP Serena, Everready, Sentiment with Chumi. I don't know whether you have any counter that you'd want to comment on some of the losers that we have seen over the 3 months.
In general, for all the losers, one of the things that we are seeing for all of them is that they are in loss-making positions. Okay. And specifically for Kenya Power, which has lost 24%, what we've seen with Kenya Power is that they are struggling with collection of revenue, they are struggling with debt repayments. So in terms of their profitability, Kenya Power has been struggling. And we have yet to see any structural changes that would give investors confidence that Kenya Power would be able to return to a high cash flow position and high profitability.
Okay. Let me come to you, Samuel. Let's talk about the gainers. I see Can General hoping 103% rise. Stanbic, Crown Paint, BOC Kenya, and even BAT well performed over the 3 months. What's your comment? Any counter you want to pick on?
Not necessarily. I think Can General, I would look at the fact that they are very well positioned in the motorcycle industry, which is really growing. I think they have the TVS, and most of the spare parts I would expect would be coming in, through Can General. Yeah. Of course, they have, that means that there are certain investors seeing an opportunity there and taking it. Yeah. But looking more generally at the gainers and losers, it's easy to notice that there are very few blue chips, if any, in that list. None at all. And that is a very strong indicator as to the fact that most of the activity now has gone to shares that we would not normally see on this list. It's gone off the blue chips and off the high volume traders, and that is it's very indicative of low foreign participation. Okay. Because remember, if you look at what is now on that list, apart from say Stanbic and BAT, who would have a foreign interest, the rest have no foreign or very little foreign interest because of the deal sizes that they offer.
Okay.
So that is also indicative of the sort of volumes we're dealing with. It means that the big boys, in as much as they might be the movers, have not seen much in terms of gain or loss. So it's more stagnation. They may have lost a little bit, but not significantly.
Okay.
But even with those losses, for anybody who is sitting on resources, on funds, then it would be a good time to look at them at this point in time.
All right. Let me stay with you again, Samuel, on this, and I would like you to comment on the shilling, because we have seen it declining in terms of value over the time, over the 3 months. I don't know, what's your quick comment on that as well?
Well, January to March, of course, this is dividend season.
Yeah.
Most of these dividends, remember, foreigners own a lot of what we have. So
absolutely,
naturally, that will push demand for the dollar up. There's inflationary pressure, especially on oil. That is pushing, again, the demand for the dollar. Because then, again, we need to spend more on the dollar, you know, to import our oil and all that.
Right.
And so that naturally means that the shilling will be under pressure because of that demand. Remember, we also have our debt payments, and that also is another pressure on the shilling. So there's a lot of pressure on the shilling, and in as much as CBK has, you know, tried to protect it as much as possible, and also, you know, we are starting to see something like fuel subsidies coming in, which again may not be sustainable if you know, oil prices continue to go down. So there's a lot of pressure on the shilling. Hopefully it will hold, but we can expect it to continue.
All right, Faith, let me come to you, because, you know, that's one of the factors we've seen the shilling really decline in terms of value, and we have also seen other factors like the oil prices now going up. I don't know what would be your message to any investor who comes to you as an analyst and asks you, should I be worried? Should I pause on my investment, take a breather or something of that sort? What would be your advice, looking at all these factors affecting it? Maybe you could comment on these oil prices. Are we about to see the market shaking in its own?
I think we are about to see a lot of producer pressure in terms of price, because we do have manufacturers, we do have producers who rely on fuel, and so that will likely push cost of producing goods up, and will actually end up seeing inflation rise. So one of the factors that investors should be keen on is getting investments that will be able to cover for the inflation pressure that we'll be seeing over the next couple of months. But more importantly, it's to be able to look at companies that will be able to sustain demand. So the likes of Safaricom, even if fuel prices increase, people are still going to use airtime. The banking sector, especially the larger banks, will be able to survive this time because manufacturers and industry players will still need credit, individuals will still need credit. So the thing to look for at the moment is companies that will be able to ride out this wave. So I'd say smaller companies would actually be in a more high pressure position because they are likely to be able to raise as much credit as they need, and they also will likely be unable to meet the demands that will be coming up in the next couple of months.
You know, it's interesting you mentioned banks, but the last results from the banks, all banks actually across the board were very happy all the way to the bank. I don't see them here. I don't know why they're not here. I don't know who I'm going to ask to comment on that, whether it's you, Samuel, maybe.
Well, again, as I said, most of this will be big blue chips. So then again, you'll see the volumes in terms of, say, the foreign exits. But the price pressure is not high enough to push the prices down, you know, low enough for them to appear on the list. Neither have they gone up. What is interesting is this year was a very good dividend year. Very good. In fact, it means that it's a compelling reason for anybody who is looking for where returns will be, because if you're looking at some of these blue chips, you know, the bigger banks, the tech companies being in a buy zone, meaning they've declined in price, and they're paying dividends to the tune of 8% and above for some of them, then that definitely tells you that buying them would mean you're going to beat inflation with the dividend, given that they've given a good dividend, and you're going to be positioning yourself, because as soon as the global economy starts to become stable, then naturally those funds will flow back in into the market. So you'll be positioning yourself for a very good return. So I think this is a time for the brave. This is a time for those guys who say, you know what, I'm contrarian, I'm going to take this position and sit on it, because we don't expect that much more downward pressure. We've seen the likes of Safaricom sort of stagnate at You know, it's current 34, 50, 35 shillings, you know, just fluctuating within a certain range,
All right.
which is a good sign.
Okay.
Yeah.
I see Faith agreeing with you, so I will not even ask for that comment. But Faith, we're headed to the elections, and a lot of people, they get a bit jittery, especially when it comes to investing. I mean, Samuel says, you know, it's time that you get there bravely. I don't know, what's your comment on this, especially with regards to elections? For all investors who are watching, what would be your advice?
My advice would be similar in that this would be the time to invest. Okay. But again, similar to every other election year we've seen, investors need to be keen on investing on companies that will be able to ride out the wave, because one of the things that we know about our elections is that they're unpredictable, especially in the run-up to August. Yeah. We're not sure how the next couple of months will look like. So it's important to invest in companies that will be able to ride out the election wave. Yeah. So I'd say being in blue chip companies at this point would actually be the best option for investors.
Wow. Goodness, Lord. I don't know whether I have left any parting shot from you, Gishohi.
I think we need to really emphasize that. This is a very good time.
It's a good time.
For somebody, especially those holding, you know, portfolios that are sitting on some very toxic stocks. Yeah. You know, those ones that have sustainably been in loss position are trading at very low prices. Yeah. And they're holding, you know, and the chances of them recovering could be another 5-6 years. Yeah. They're also in a position where they can say, let me sell off, you know, let me clean out these toxic ones, position myself in those that will most likely, you know, regain value very quickly, immediately after. Okay. Those that did it before the COVID or during the COVID pandemic actually made a lot of money, because then they bought things like Safaricom at what, 26 shillings and sold it at 40 something. Wow. But by exiting the toxic ones, then you sort of position your portfolio in a way that it will regain value. So this is a time to be talking to your stockbroker and looking at what are the best options and take the plunge.
I must get a parting shot from you as well.
I would say on the elections, I'd say investors have actually priced in the election. So contrary to other previous years where elections would be priced in closer to the date, I think given our historical placement in terms of elections and what we've seen before, investors this time around have actually priced in elections. Wow. So for those ones that are waiting for the prices to be lower, unless a significant change happens within the next couple of months, investors have actually priced in the cost of elections already. So it's time to make the decisions.
There you have it. It's time to make a kill. Be brave, as Samuel has put it. Thank you so much, guys, for coming. That was Samuel Gishohi, Head of Business Development at NCB Investment Bank, and Faith Mwangi, who is also a research analyst. Really putting it as it is. It's bye-bye for now. Please enjoy yourselves and look forward. Be safe and, buy. Make some kill. All the best. Trading well.